Good afternoon, everybody. Welcome to Trader Merlin Show. It is your weekend edition Friday. Good Friday, man. I hope you all had a great trading week. This week was so much better than last week, even though I had a bad losing trade yesterday, which frustrated me. First part of the week was fantastic, and most of my trades panned out pretty well. So I will share what happened, the conclusion of some of the trades that I was in. Some of those actually were exercised today, so I'll keep you up to speed about what those ones were and what those positions look like. So first off, cheers. Happy Friday, everybody. Again, I hope you had a fantastic trading week. It's taller glass today, so I'll be pretty loopy by the end of the program today, but it's Friday. We'll have some fun with it anyway. All right. Let's dive into this one. I got a roller coaster. Yeah, Captain Kirk. James Tiberius Kirk to you, Mr. Ebb. It felt like it was kind of this style of trading week where you had a lot of choppy action, ups and downs, and kind of just, there definitely was direction. Overall, we had a pretty negative week, but here is the S&P 500 bouncing all over the place, and ultimately the way we ended the week is what has me the most, I don't want to say concerned. Concerned isn't really the right word, but I guess confused. And the reason I say confused is generally you get this somewhat of a respect for supply zones, demand zones, and I feel like today, not just today, maybe last week or so, just disregards for them. And the reason I say that is look at your S&P 500 for today. We've had this yellow box in here, and it's hit that 3 days in a row. We came down to it, bounced, came down to it, bounced, came down to it, and bounced. And today, we ripped through that thing early on. And it was one of those moments you're like, uh-oh, here we go. And then all of a sudden, markets came screaming back. So this was like a bear trap. It felt like it was like, oh, are people going short now? Do people liquidate their long position? Boom, let's rip that thing to the upside. That's just the way it felt today. Just so the podcasters can get a sense as to the magnitude here. From where we closed yesterday to our low point on today's session, we had a slide of 1.27%. And then at one point, we were up 0.78%, ultimately closing for the S&P up 0.48% for the day. That certainly doesn't look as bad as yesterday's ominous red candle, but that big swing in volatility also does wonders, I would say, for anyone who's looking for hammer formations. That's another hammer formation that we talk about all the time on the show. And that means right now you've got a high point of 5,791 on that S&P 500 for today's trading session. Now, obviously, market's closed. Market's going to be closed tomorrow. And if you go to Sunday night, for those of you who are futures traders, if you get an open below 57.91 and it starts to drift above 57.91, that's one of my rules for going long on this hammer formation. And albeit it's a giant long bottoming tail on that hammer formation. So all in all, even though it was very bearish at one point, it does look like a nice positive potential for Sunday and Monday. Of course, Mondays have not been the best trading markets. It seems like this year, Mondays have been the worst day of the week for trading, at least from a market gain perspective. So I'll have to wait and see on that one. But that was your first real disregard for the markets. Let's look at NASDAQ as well. Notice NASDAQ, we have this demand zone drawn out. We've bounced off that twice aggressively one time. And today just went through that like a hot knife through butter. And we'll show you what it looks like on a 5-minute time frame. We ripped through that thing early on in the morning. I think some of that has to do with the unemployment numbers, which we'll talk about in just a second. And then just, scream the opposite direction. Now, it wasn't just the S&P and the NASDAQ. You look at the third member of the posse, the younger brother, if you will, the small cap, and that's Russell. Russell also ripped down below that one and also has a hammer well, not necessarily hammer formation, but, disrespecting that demand zone, making it very difficult to kind of plan larger trades, for me anyway. I know you all have different styles and approaches to it, but for me, I like a level that seems to be respected. Right now, just chop and awe, if you will, is what I would call that one. Now, the Dow, of course, is a little bit different picture. We still haven't made it down to that 41,844 mark, but that to me is where I would be looking for the Dow to bounce off of, but we're not close there yet. Dow is certainly the strongest of them all. Let's see, some of it, I didn't take it, but there was a nice 15-minute wick over wick on the ES. That would have been a nice short. If you go back to the short opportunities here, I'll bring up your 15-minute time frame. Why not? Especially early on, if you look at the way that we moved this morning, right here, where you see this spike up, this long topping tail here that brought us all the way up to about 57 and 86. that was when the unemployment rate came out. And you had a couple different things intraday. I mean, you guys know I'm a shooting star, hammer formation kind of guy. You had a beautiful shooting star right here at 6:45 in the morning, so 15 minutes into the day. Your opening 15 was basically, a giant shooting star, and it had a massive sell-off from there. So there are wick on wicks here as well, but let's real quickly, because I'm talking about it, bring up your unemployment rate. Expectations was that we were going to see 4% as our unemployment rate, and we've ticked up to 4.1. Now, I'm going to go out on a limb here and give you my thoughts. And again, my thoughts don't matter. It's my actions that matter from my account, not yours. I do think that over the coming months, you're going to see this number tick up, tick up, tick up. Right now we're at 4.1. It would not surprise me to see that by like July, we could be seeing numbers like 4.5. And again, I think a lot of it has to do with what's going on with Doge. I think companies as well are starting to get rid of some employees that wouldn't be considered essential, those that are underproducing. I think companies are taking a page out of Doge's book and saying, look, why can't we go through our own companies and play this kind of militant, chopping block type of approach as a company? And I think more companies will do that. And I think you're going to start to see this become an issue by the middle of the year. Now, the problem is, if we get this unemployment number to rise more, and again, I still think 4.5% is not that big of a deal, but it is more about the trend and the probability for this to start to continue moving up. I mentioned this many times where if you look at this long-term chart of unemployment, we still are historically low. I've got a picture up here for all the viewers out at home. This goes back into 2008, and we're still historically low. I mean, some of the lowest ones we saw were back in 2020, around 3.5%. We were at 3.4 a couple times back here in 2022. So we're at 4.1. And I had mentioned this, that during this period here, where we had high unemployment from 2009, 10, 11, after the financial crisis, right? We had that big unemployment surge. Ben Bernanke got out there and said 5.5% is our number. That's what we consider full employment. So if 5.5% is full employment, and you look where we are today, we've got a long way to go to get there. So again, I don't want to paint a picture of doom and gloom. I just think we're going to see more unemployment going forward. And as that happens, the Fed has a decision they need to make. Remember, their mandate is not about GDP growth. It's implied, but it's not a mandate. The dual mandate of the FOM, or the Federal Reserve, is stable money supply, or stable pricing, and unemployment, right? Monitor those, keep those things in check. So if we start to see one of their two principal cores of the Fed, which is unemployment, start to surge, then they may be forced to take action and cut rates, right? They'd have to cut rates to stimulate economic growth, which would stimulate job growth, which would stimulate hiring, and therefore reduce our jobs. I do think at some point, in the not this year, but maybe not next year, but in the next 3 or 4 years, I'm curious what you guys think of this. Do we get to the point where the Fed will lower interest rates to stimulate unemployment, but those jobs just simply never show up because of AI and robotics, right? That's the conundrum I have. And I think it will come probably in 2026, 2027, we'll start to see a deeper impact to that. But that's a variable we haven't seen. We haven't seen mass displacement because of a technology. Typically, a technology causes unemployment in an industry, but those jobs are created somewhere else, and the markets continue to thrive. But when all industries are being faced with displacement of workers, where do they go, right? That's the conundrum we talked about with Don Fron a couple weeks back, and I don't know the answer to that one. But I think we'll have to face that one over the near future. Then he says, no jobs increase in percentage because of inflation. Well, remember, the inflation side of things, too, is if they lower interest rates, that starts to push inflation up. So now they're back to this dance that they have to do with regards to balancing interest rates. But this was your big piece for today. We also had a disappointment non-farm employment change, but we knew this was going to be bad because of the ADP non-farm employment change that happened earlier this week, I think on Wednesday. So let me just zoom in here. These are ADP non-farm employment change. This is the creation of jobs, new jobs being created, and it's drifting lower. Now, today's number was actually fairly decent because we were expected to go to increase. We just didn't increase as much. Went from 125,000 jobs created to 151,000. So great. We increased 26,000 jobs, but we were still 8 short of market expectations. But you guys know me, the trend is your friend till the bend at the end. It's my tattoo, right? Look at the highs here. This is slowly drifting lower. I'd argue that for the past 6-8 months, our non-farm employment change has been relatively flat and static and not doing much. But this is still not a good sign, especially if we have a robust economy. So these are things we'll have to keep an eye on over the coming weeks. This does not look good. You also had average hourly earnings decrease, which is not good. We want for spending. We want those that to be there. So that is I would say your most important pieces for today was the unemployment rate. Also looking at the non-farm employment change, 2 big pieces. Next week we get more inflationary numbers with CPI and PPI, but we'll get to that one a little bit later on. All in all, what does that mean for these markets? Well, I still think that uncertainty is going to play the major role in our markets going forward. I think, again, Trump and tariffs and all that will take center stage, but the demand zones that I was relying on for my trades, I don't know how you guys are doing yours, but I'm a supply-demand guy. They didn't really work that well for me this week. Well, I guess they did on Tuesday and Wednesday were great trading days for me based off of these demand zones being hit on the S&P, right? These are both great days. Yesterday, I got stopped out and took some losses. And today, I didn't make any trades on S&P because I was just too busy doing other stuff. But that demand zone, for all intents and purposes, is gone, right? The logic behind supply and demand methodology would be that this yellow box represents unfilled orders. There are unfilled orders there. And today's action, that long bottoming tail tells me those orders are long gone. So I have to do this. I don't want to, but I've got to delete that yellow box on all 3 of these markets, the S&P, the NASDAQ, and the Russell. Actually, Russell, yeah, I got to take it out. Let's see. So that's your broad market indexes. That's one of the major pieces I want to talk about. We'll also look here at what's been going on with that 10-year. So as expected, we did get this one to respect. It did tiptoe below it intraday on the 4th, but we did get a nice bounce off this 10-year. Again, my expectations are that we'll probably get to this 4.4% and challenge that, and then we'll have to wait and see. Because if it makes it up to this 4.4%, which I will draw for you here, all right, if it makes it up to there, I'm anticipating that kind of over that implied supply zone, which was demand, now is supply, we'll probably have this impact, and then we'll probably see it come back and tackle. Because that's the current shorter-term trend is lower lows and lower highs. So we're getting a retracement back up on that 10-year yield. We bottomed out here down around 4 point. What was that low point? The low is 4.1%. Now we could potentially bounce up to 4.37, 4.4, and then we'll probably challenge this to the downside here. So that's my expectation with that 10-year. And again, so much is hinging on this 10-year. Moving on up this list, I don't have it really sorted by any priority today, so I apologize for that. If we look at the gold market, nothing to speak of. Gold-wise, it was certainly an up week, but the last 3 days have not been that great, right? Not that great. Yeah, Margaret, that just confirms bearishness. I would agree. Yep. You go to our dollar index. So I think see Saba here says, are we going to get a rally in the dollar next week? Well, the dollar, it's an interesting one. I've felt that we're going to have a strong dollar, but I've been wrong. And of course, I point to the 2 individuals who keep talking about, wanting a weak dollar. And that's the Secretary of the Treasury, Scott Bessent, and the President, Donald Trump. So it would be silly of me to put my eggs in the basket of dollars got to bounce, because technically I think it does. I think technically it does need to bounce to the upside. However, I'm not fighting Trump. I'm not fighting the Secretary of the Treasury on their ability to manipulate the dollar and push it lower, right? That's a fight I do not want to get in front of, because I'll lose that every time. So right now, if we look at that dollar index, it's come right down into an area of demand. And it is a fresh one. It's never been touched before. It's tricky because normally what we like to buy into is we like to buy a pullback in an uptrend into demand, right? And I would argue that in this picture right here, and what I'm showing my viewers on YouTube is, the dollar index really started surging in late September of last year, and it made nothing but higher highs and higher lows. But now all of a sudden, we've broken that swing low, which goes back to December of last year. And now we're all the way back down. So this tells me that trend is actually broken. So buying a pullback in an uptrend, remember uptrend, series of higher highs, higher lows, buying a pullback in that uptrend, great. But we're no longer in an uptrend on that dollar index, right? The most recent activity over the past couple of weeks has shown me we're no longer in that uptrend phase. So I certainly don't put as much emphasis on a bull market rally here, but based off the chart, it does look like the dollar should bounce out of here. But again, the markets have not really respected too many supply and demand zones here over the past couple of days. So I do think you'll get a rally in that dollar index for sure. Saba says, I was looking at the Euro USD, seems overdone. Same thing, right? The dollar index is going to be just the opposite of the euro. So here's your euro. And if we were to go out and draw in a little supply zone here, I want to be more specific by going to a smaller time frame, but just in general, there's your picture. So pretty much the same story, just upside down, right? The euro has been ridiculously strong over the past 5 or 6 trading sessions, rallying right up into supply. This may make for an opportunity to short the euro going into next week. So yeah, all this represents opportunity. The tricky part, Saba and others that are looking at it, is I can go into it with this, for example, on the euro, I can go into it with a bearish outlook, but I got to be careful here because remember, if I'm going long the dollar, I'm betting if I'm going long the euro in this picture, I'm betting against the dollar. And right now, that's the place to be, right? You want to be betting against the dollar, at least for now, because of what Trump investments are doing. So yeah, it's Jeff says creating new patterns. It's switching. Yeah, we are definitely seeing on that dollar index, the Dixie that I had up here. In my opinion, the uptrend that we saw at least since September is over. Right, based off of pure technical analysis, because it's breached this, it is definitely over as an uptrend. That doesn't mean that the dollar can't rally from here. It just means that the trend that we witnessed from here, right there, that's now the yellow box there on your screen is now over, right? Because of the action we had this week. Does that help my bearish gold trade if we get a reversal? No. It would actually hurt. Yes. A weaker dollar drives the price of gold up. So if the dollar rallies, that would drive the gold price down. So that would actually help your bearish trade on gold. Correct. Yes, sorry, I was misspoken. But here's your gold chart. And right now, gold's looking great. That uptrend absolutely still intact. Still, there's one little blip right here. This goes back to November of last year where we just broke a swing low and then kind of rallied right back up, and now the trend is still going. So even though we've got a little bit of a break there, it's still overall in a beautiful uptrend going all the way back into 2023. Gold has just been absolutely fantastic. I don't see why that would change. I am bullish on gold. So if we do see that dollar rally, that should be bearish for your gold chart here. A dollar moving strong to the upside should hurt commodities in general, right? And that would be crude oil, gold, and any commodity priced in US dollars. And let's see, crude oil. Crude oil has been respecting that lower demand zone we talked about. Again, I still am long-term bearish on crude oil, but I do think you're poised for a bounce right here. We talked about that. I think you might get a bounce up to maybe $70 here because that seems to be the prevailing trend on crude oil. So yeah, $70 kind of becomes that target. It's still respecting this demand zone here, and that demand zone for the podcasters is between $65.25 and $67. So we got about $1.75 range there that we're kind of in the midst of right now. Actually, we're just about to pop out of it. So that's great. And lastly, I'll transition the discussion over here into cryptocurrencies and digital assets simply because it is such a hot topic. And we'll talk about what happened last night. We'll talk about what happened this morning, which is even better, or this afternoon. But right now, Bitcoin not looking so great. It still has this, what appears to be a downtrend starting from really December of last year. Lower lows, lower highs, and today down 2.47% on what most people would call amazing news, right? Last night, if you guys saw this one, but last night, the President of the United States signed an executive order. And that executive order, man, I feel like I was clairvoyant on this one. I think we said it here specifically. Did I not say it yesterday or the day before? I said what's going to happen is you're going to get two separate paths created here. You're going to get one that is going to be a strategic Bitcoin reserve and only Bitcoin. And then you'll get another one, which will be the digital asset stockpile, which can have a mix of different cryptocurrencies. I think that was my exact talk track yesterday, or maybe in the day before. I know I've been saying it for weeks in my crypto program. And lo and behold, we have 2 executive orders. One of them said, we're going to have a strategic Bitcoin reserve. This is that moment. You talk about legitimacy for cryptocurrency. Now, why did it sell off so much? Why did we see such a bad day in Bitcoin when you have historic events being done? The president now has a strategic Bitcoin reserve for the U.S. government. Here's why it was viewed as bearish. There's 2 pieces to this, and I got the graphic up here because we'll talk about the crypto summit in a little bit, but I want to explain this, the process here. Understand that crypto has been mired with what they call regulatory stranglehold. They call it Operation Choke Point 2.0, where by design, our regulators were preventing banks from doing anything with cryptocurrency. They were choking out crypto and digital asset businesses. They were getting shunned if they did any loans or anything to crypto companies. So it was just buried in this legal garbage that was done by the previous administration. Now, all of a sudden, you've removed all that. And not only have they removed it, but if you saw some of the summit today, or at least the introduction, they were very clear that they were removing any of the chokeholds that were put on by the previous administration to stop cryptocurrency. However, they didn't say that they were going to buy a bunch more Bitcoin just yet. Here's what they said. The process for getting to this strategic Bitcoin reserve, step number 1, and I have a great graphic here because in my opinion, this is what it looks like, right? We have just taken this first step, this first disc in front of us. And there's a long way to go to get to the utopia for crypto and digital assets that I see happening. But the first step, and by the way, the reason I drew this graphic is there were so many people that were losing their minds and this is garbage, we've been hoodwinked, we've been bamboozled, and Trump's a liar. Look, Trump did what he said he was going to do. Now, he said he was going to do it day 1. He didn't, right? I don't know how many days it's been, but here we are in early March. It's been, 40 days or something? He said, I will transfer over all the Bitcoin from the U.S. Marshal Service over to the Treasury Department. That's what he said he was going to do. Now, he's done that, calling it a strategic Bitcoin reserve. So the government isn't buying anything. Government's not buying anything. What's happening is the government is simply moving those Bitcoin over to the Treasury Department. So now that the Marshal Service cannot sell those on the open market. At its base level, that's a great thing. Because now the government's not going to sell Bitcoin. When it was in the coffers of the Marshal Service, they could sell whenever they wanted. And that puts selling pressure in the marketplace, which pushes prices down. However, markets anticipated the approval of Cynthia Lummis's bill, or Lummis, which is we're going to buy 1 million Bitcoin, 200,000 Bitcoin per year for the next 5 years, and we'll hold those for 30 years. That's step 2. We're not there yet, right? We have to accept small victories. It was in my opinion, this was not a small victory last night when Trump signed that executive order. It was monumental because it now puts the spotlight square on regulators and says, hey, the president, the secretary of the Treasury, the SEC, and everybody else that's touching crypto right now is on board that we need to make America that hub. And we're starting by not selling any crypto assets. Step 2, which as I mentioned yesterday and many weeks before, I believe Cynthia Lummis's bill will pass probably sometime later this year. And the reason for that is, where are you going to get the money, right? If they started a Bitcoin purchasing bill today that said we're going to buy 1 million Bitcoin, some of you, even though you're pro-crypto, are going to be like, that is BS. You're taking taxpayer dollars and you're buying Bitcoin. I don't want that, right? That's what a lot of Americans would say. So what Trump has done is said, I will move all this stuff over that we already have and we'll never sell it. Then we will find ways to buy more, to acquire more without using taxpayer dollars. And I think this is the really important next step. You guys tell me, what are some things that the government can do to raise money without impacting you as a taxpayer, without taking your money directly, but how can they raise money and then start buying digital assets? There's several different ways, but I'm curious what you guys think here. If over the next 6 months or so they pass Cynthia Lummis's strategic Bitcoin reserve bill, they're going to have to come up with a lot more money to buy it. And again, I think there's a lot of different ways we can do that, but I'm curious. Should they do this at fair value? Sell bonds? They could sell bonds to do that, which is the Michael Saylor model, right? That's what Michael Saylor's been doing. They could sell bonds. But remember, here's the problem with selling bonds. They're already selling bonds to make enough money to pay on our interest on our debt. And those bonds, it's the most we've ever sold. So now we have to find more buyers for bonds, because if we don't find buyers for those bonds, what's going to happen to yield? It's going to go much higher. They don't want that. So you could use bonds. What else we got in here? Lower taxes. You could lower taxes, but that doesn't translate into money coming into the government to buy. They need money to come in from somewhere so they can buy crypto. What else we got? Retire some senators. Cut spending. Until we have a balanced budget, right, and we're even, cutting spending or lowering taxes wouldn't help this. They need to generate income from somewhere. John, good one. Sell real estate. Now, we've heard from Elon Musk, and I don't know the validity of this, so I can't say it's true, but I've heard tons of reports that a lot of these government buildings are empty. Employees are just not coming to work. Now, we've heard Trump say, hey, come back to work or you're fired, right? And Musk say that as well. Maybe we sell off some government buildings for several $100 million and buy Bitcoin with that. That's one way. What else we got? Money they get from criminal activities. Correct. So any money that could be seized, Thomasina. Not only money, but any assets. So I used to go on to a lot of websites. You can actually, let me see if I can bring it up here. 1 second. U.S. You can go to U.S. Marshall Auctions, and you can literally go to their website and bid on different assets. So let me see. Let's see. Is there real property here? I'm just going to bring it up and see if we can. So I think Real Look might be the arm of the Marshal Service that they're selling confiscated real estate. So this, I believe that's what this is. Man, nice one up here in Greenwich, Connecticut. $7 million for this just gigantic house. But the Marshal Service, you can buy all sorts of stuff there. And I used to go there a lot, right? I used to go there a lot and look for assets and things to buy. Now we could take that money and take that capital and buy crypto with it. So there's the selling of assets, selling unused federal buildings. Here's one that could be different. You could create a presidential executive order that claws back money that was contributed to senators and take that money and buy it. That would be a little more risky. You could sell some of the gold that was in Fort Knox or is supposed to be in Fort Knox, right? That's another one. Jason, where'd you come from? I'd love to live in a meth house. Good for you, bro. I don't want to live there. You could also sell the Postal Service, Amtrak, other agencies that are government run, which are probably really inefficient. You could probably sell those and take those proceeds and buy. Here's the other big one, is leasing mineral rights. And I think this is where you're going to start to see a lot of it come from. President Trump said, drill, baby, drill, over and over again. He's going to open up a lot of mineral rights to not just petroleum and oil, but rare earth metals, other natural resources. A lot of federal land could be opened up, and those lease payments could get put into purchasing for cryptocurrency and digital assets. And what else do I have? And Doge savings. Right? You could argue that the savings from Doge, instead of giving $5,000 each American as a tax credit, as a bonus, just buy Bitcoin. Right? If I'm Trump, probably what I would do. Instead of giving it to the consumers, giving it to us, which would make you feel happy and maybe boost his approval rating, he could do a lot more damage, for the good, by the way, a lot more positive damage by buying Bitcoin with those assets. So who knows? Who knows where it's all going to come from? But David Sachs, the crypto czar, and Scott Bessent today at the Crypto Summit both made it very clear that they will be looking for ways to purchase more cryptocurrency and digital assets. It was not we're just happy with what we have. It was a first step, right? And I think that's really important, that we understand that there is a process to this. It's kind of a labyrinth right now to get rid of this maze of bureaucracy and other garbage that's been put in place over the last few years. Or you go, or you look at this process here and say step by step by step by step, we'll get there, slow but sure. Bottom line is, I think what happened today, not just today, but last night through today, historic. Now, one thing I did notice, I watched the opening 21 minutes. Conveniently, it was 21 minutes. There's 21 million Bitcoin. There's a lot of people, conspiracy theorists about that. But all of those individuals, it was a really, a very, I don't know how this is the right word to say it, but a kind of session for President Trump. I mean, every one of them was just glowing words for Trump and throwing the accolades around like he's the one that's responsible for it. Look, wherever you want to throw credit around, do it. For those of us in the crypto space, it's critical that we see this step happen because now it's legitimized it. I actually went and had the opportunity to speak in Jordan Matthews' futures class at Trading Academy today. It was a lot of fun. So if I got some new people here from that class, good to see you guys. It was great to come and chat with you. But we now have that step of legitimacy for cryptocurrency and digital assets. I can tell you, I have people who refuse to talk to me that think I'm some demon because I have been pro-crypto and digital assets for the past, 7, 8 years now. And now it's nice to get a little bit of redemption there, that this is not a scam. It's not a fly-by-night thing. I mean, these are legitimate assets, legitimate businesses, exchanges, lending protocols, swap sites, identity, maybe even voting systems will all be done blockchain. And in a few years, we will have our financial markets, including the CME, the New York Stock Exchange, the NASDAQ. All of that will be done on blockchain using some of the technologies that they're talking about putting in the digital asset stockpile. So anyway, long-winded there. Sell the Department of Education to who? Who's going to buy it? Let's see. Cut security for former losers. Yeah, I like that one. If you're done as a president, you shouldn't get protection anymore. Beat it. And Liz said that's why he wants to buy Greenland mineral rights, right? We can make the argument that Greenland will be a strategic defense point, and I agree. Look, if there were to be a nuclear attack come over the polar caps at us, we might be underprepared. But having Greenland as a defensive post may give us a little bit of a head start. Let's just hope that society is past the point of nuclear and understands the damages that this could cause, and we can hate each other and we can point fingers and say North Korea sucks or Russia sucks, but hopefully we never get to. I think Nagasaki and Hiroshima should have told us all we need to know about that sort of destruction, and we should never do that again, never. Let's see. Oliver, I'm shopping for Bitcoin. Look, Bitcoin could still go lower, but I do think that Bitcoin now cemented its place. I don't think you're going to go much lower if we do. And then I think that once the government starts to get some money in place, they will start to purchase a little bit more, a little bit more, and a little bit more. And hopefully we will see Cynthia Lummis's bill passed. Honestly, you guys should be writing your politicians being like, he should pass the Lummis bill. Pass the Lummis bill because it will strengthen America, puts us in a better financial position, and then also, for me as a citizen, it makes me trust the government. And the reason I say it makes me trust the government is in the bill for Cynthia Lummis for the Bitcoin reserve, it will all be in an address that's public that the people can see. We can look at it. We can audit it ourselves every single day. And I don't need to audit it because I just look at it. And I know it's there because if it's on the blockchain, I can see it with 100% confidence and trust. So let's do it. It's great. We're not where that France is going to provide nuclear protection. I know we're not over it, Finn. Sorry, it's not Finn. It's Fury. I know we're not over it. I would just hope that humanity prevails in these types of things and, we come out, but cooler head prevails, and we don't pull that trigger. I hope it never happens in my lifetime. Yeah, let's get to Mars first as a continent, and then see as a global continent, and see where we go. Can you ever trust the government? Good point, Sava. It'd be the step in the right direction. I think we'd all agree it's a step in the right direction if we had transparency into what they were doing. And one of the discussion points I had today with with the class in Irvine was looking at some of these different cryptocurrency projects, and I'll bring up some. You look at things like Cardano, which has not done great. It certainly has a phenomenal, couple months here. But you look at things like Cardano or Algorand, or you look at something like Aptos. Aptos is another, layer one blockchain that you can build on top of. You have BNB, which probably won't become that one because it's really a Chinese-run blockchain. But you have things like Polkadot. You've got Ethereum. Ethereum getting absolutely just annihilated. And Ethereum, again, I'm losing interest fast in Ethereum because they're just not upgrading their systems fast enough. But you have protocols like Solana or Near Protocol, right? All of these could have massive ecosystems built on top of them. And ultimately down the road, our government will function better. In the things I've been hearing from Elon Musk and from the different agencies is the reason we're finding out that, there's 300-year-old people getting Social Security. No one's 300 years old. So someone's just collecting those checks because the system didn't turn it off. There's something there because one system doesn't talk to another. So there should be a national database of who's alive and who's not. Social Security should tie directly into that and feed off of that. But if you have two different networks that don't talk to each other, then how are you going to know? So what we'll probably have is blockchains that are interoperable, that the Department of Motor Vehicles in each state are connected to each other. Wouldn't that be nice, right? Where you could simply just hit a button, transfer your driver's license and everything over. Instead, the DMV in Texas and California and Massachusetts, they're not on the same network. They have their own. They use their own little networks. You could have government agencies and the IRS all using blockchain and sharing information. So waste and fraud starts to disappear because of blockchain. So I think it's getting better and better and better. Jim says, do I participate in any liquidity pools? I don't. I have done it in the past before. Liquidity pools, for those that don't know, are where you actually get to contribute. You put your cryptocurrency into literally a pool of liquidity. So let's say I want to be part of the Ethereum USDC liquidity pool. I put in, let's say, $5,000 worth of Ethereum, $5,000 worth of USDC, and anybody who transacts in that pool, I get a small percentage of it, small commission fees. The problem is this is all done with smart contracts, and I have a personal fear of smart contracts. If you look up online, type in smart contract crypto hacks, and you will see page after page after page after page of smart contracts that have been hacked and crypto stolen. So that's made me shy away from it. However, just to Jim's point, if you're going to do it, stick with the big name brand firms like Uniswap or SushiSwap or PancakeSwap, right? The big liquidity providers, as opposed to some rando little one you've never heard of. They may not have their smart contracts audited, and that could be problematic. So I definitely, I like the idea of adding liquidity to a market. There's also a concept called impermanent loss. So another big danger in a liquidity pool is if you have a wild swing in the price of one of the two components, you could suffer impermanent loss, which could be significant. All right, so there is risk there involved. I prefer staking, Jim. Much more prefer staking. All right, I'm off the rails today. Sorry, everybody. I've only had one sip of whiskey as well. It's time for another one. Cardano sounds like Grant Cardone, so I ain't touching that ever. Jeff, if you want, I share this one with people all the time, and I do think if you are interested in the crypto space, not only should you listen to this one, but it'll tell you kind of about the crypto industry. Let's see. What do I want to put in here? This is Lex Friedman, Charles Hoskinson. And I send this to many, 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 many people. If you are interested in crypto and digital assets, in my opinion, this is a must watch. So let me throw this in the chat for you. It's a 4-hour interview. 5-hour interview. And in that interview, it talks a lot about why crypto is important. I think many of you understand that. There's some that probably don't get it. It's a good job of explaining it. He's a very articulate, very smart guy. So I don't let the name Cardano think of Cardone and fool you. People think that Cardano is a scam also. I am not in that camp. I think Cardano is legit. I think Cardano is a big player out there. All right, let me see. Everardo says, Merlin, Michael Saylor either doesn't like President Trump or he wasn't very pleased because he was making funny faces when President Trump said he will see how fast this plays out. Look, Michael Saylor's a character to begin with, and I don't, he is there. My problem with Michael Saylor is he's kind of a one-trick pony, right? Michael Saylor does not care about Ethereum or Solana or digital assets. He has no interest in Algorand or Sui or Aptos or infrastructure and how this improves society. Michael Saylor is there only as a beacon of buy Bitcoin. That's it. There is nothing else in his opinion. And I disrespect that opinion, that it's only Bitcoin and nothing else. So, Michael Saylor doesn't really have much of a job at this summit other than trying to orange pill people, trying to get people to buy Bitcoin, which, fine if that's your mission. But I'd much rather see people like Andreessen or Charles Hoskinson talk about, what does this technology do for us as a country? How do we build our payment rails, our information superhighway? How does that get put into this Web 3.0 construct that now we can all be a part of, right? That's more important than buy Bitcoin. Now, that's one piece of it. So yeah, he looked bored. I don't think he got much of a stage because honestly, what does he have to contribute? Buy Bitcoin, right? That's his mantra. And he's right. If you can buy Bitcoin now and borrow money and buy more Bitcoin, as long as your rate of return on your Bitcoin is higher than the rate that you borrowed it at, you're going to win. If that switches, and now all of a sudden you have a higher rate that you're paying for the money you're borrowing versus what you're getting on your Bitcoin, then the model falls apart. So that's why he looks so bad today, Everado. Money is actively being stolen, and she knows it. I don't know if that was. Nancy is. Yeah, Nancy. Look, it's not just Nancy Pelosi, right? When the tide goes out and we see where the fraud and money was, this is not Democrats. This is both sides, right? Politicians, I'm sure, and many individuals with many different political affiliations are taking these Social Security 300-year-old handouts or using this system inappropriately because they know no one can see it. And that's why I make the argument that we need digital assets and blockchain to run these entire systems so it's all viewable in one location, like one app for all this stuff. Then we see where the illegal stuff is happening, and it's on both sides of the aisle. Trust me, it's on both sides. I know some people like to throw shade at one political party or the other. They're both doing it. Democrats, Republicans, Libertarians, Green Party, they're all using these systems to make themselves rich. There's little you can do to convince me otherwise. The computers in government agencies are just first Apple. They're old. I'm sure they're old. The Treasury and Commerce Department will also explore new pathways to accumulate traditional. Yes, that's exactly what was said today. Thank you, Margaret, for putting it in. I always like when there's direct quotes. And I believe that was Scott Bessent, who's the Secretary of the Treasury. When the Secretary of the Treasury is saying we're going to find new ways to raise money to buy crypto and digital assets, how could you not be bullish? I don't know. I don't know how you can not be bullish. Yeah, Chainlink, I'm a fan of as well. Now, Sergey Nazarov, who's the CEO of Chainlink, he was at the summit today. I saw him. He didn't look very happy, but he was sitting there. And hopefully, he gets a say because oracles are a very critical part of the entire crypto space, but it's actually bigger than just crypto. An oracle, for those that don't know, you guys, you type in a chat. If you, I'm going to do a poll. Great. Engage. Let's do a poll. We'll do a Q&A. Oops. No. Hold on. I'm going to bring this poll up here real quick. And oracle is. And I'm going to just type in here in crypto. All right. I'm just curious what you guys think of this one. Hopefully I typed everything right. It's tough to type and talk at the same time. Do you know what an oracle is in crypto? Just simple yes or no. I'm just curious what you guys think about this one. And the reason this is so important is a lot of the services that are being built in the cryptocurrency ecosystem use what's called an oracle. Now, we've all heard in the past, and you go back to the witchcraft days, and I've got my oracle that predicts the future. That's not what an oracle does. No, not the computer company. No, in crypto. Good point. Oracle's a database company, right? Big databases. Yeah, Jeff, vote me the Treasury Department. I wish I could. Actually, I wouldn't mind running in one of these offices. I don't have enough intelligence to do that, but I'm the type of person that I would immerse myself in it, and I'd probably try to be as good as I could be. All right, I'm going to end the poll here just because I want to do it real quick. You guys, I'll give you another 10 seconds to do it. So if you haven't clicked the poll, click it just so I know where we stand, and I'll explain it to you guys appropriately to make sure that we are all on the same page. it looks like a majority of you don't know what an oracle is. Okay, so let me explain. If you look at something like Ethereum, Ethereum is a blockchain, right? A blockchain just simply means this blockchain is responsible for recording all the transactions. So I know where all the Ethereum has moved ever. I need to know where every little piece of it is, every fragment of it. I have to have a perfect record. That's what a blockchain is responsible for. A complete, perfect ledger knowing where everything is. That's critical. And mission number 2 is to make sure that that is impenetrable to external hacks, that it's safe. That's what a blockchain does. A blockchain keeps a track of all records, all transactions. So now, let's say that Big Eb and I make a wager, and we do it in person. All right, so Big Eb's, well, you don't have a football team. You're out, Big Eb. Thomasina is a Raiders fan, unfortunately. I mean, how can you have loyalty to a team that has no loyalty? Anyway, she's a Raiders fan, and we can make her wager, and I'll say, look, the 49ers are going to beat the Raiders next time. Okay, great, and we bet $100 on it. And, of course, the Niners are going to beat the Raiders because the Raiders are trash. So when my team beats the Raiders, now I got to be like, hey, Thomasina, where's my money? Right? Where is it? I'm busy, and it's student loans. I can't afford it right now. I'll pay you next week. Or she just ghosts me, right? Just blocks my number. That's a problem with a wager. So with crypto, what we can do is say, all right, we'll make this wager on the blockchain. So what we do is we open a smart contract, and we both put in $100. And in the code, it's written that if the Raiders win, pay Thomasina's address. If the Niners win, pay Merlin's address. Simple. Now I don't ever have to worry about claiming the bet because the money's already in the contract. The problem comes up with, how do I know who won the game? Because a blockchain does not get external information. A blockchain doesn't go out and retrieve the weather, the sport, knows nothing of the outside world. Remember, it only knows what is where the Ethereum is, or the Solana, whatever blockchain it is. So an oracle goes inside of that smart contract. It's the piece that we agree upon that will go and get us the score of that football game. So Chainlink is an oracle. And Chainlink is the one, in this case, that we would say, Chainlink will get us the score of the football game. Now, the score of the football game is easy, right? Because it's pretty public knowledge, so that's not going to be difficult. The challenge is when we do something like, what's the weather? That's what I'm explaining right now, Chanel. An oracle in crypto is a program that goes out and gets information from the real world and brings it back to a blockchain. So we'll use Chainlink as an example. Chainlink, in my wager here, would be the one that goes out and gets that information from the outside world and brings it back to the smart contract. So the smart contract can now pay whoever wins that bet. Now, what happens if we do weather, right? So right now, I think, Thomasina, you're in Alabama? Alabama, Arkansas? I forget. I think you're in Alabama. So maybe Thomasina, and I'm out in Southern California. So let's say we make a wager. Say, all right, Thomasina, I'll bet you $100 that the weather in Austin, Texas will be no higher than 75 degrees on July 5th of this year. Stupid bet, but use it as an example. So Thomasina says, I know it's hotter than 75 degrees. Oh, Arkansas. Okay. So she says, I know it's hotter than 75 degrees. So she makes that bet with $100. We put it in a smart contract. Remember, here's the problem. Thomasina might look at her Apple Watch and it says, hey, the weather was 82 degrees in Austin, Texas on that day. And I'm looking at, Yahoo Weather and it says it was 71. Who do I trust? So an oracle like Chainlink or Band Protocol or Augur or Rep, they might go out to like 30 different weather reporting sites and have this whole spectrum of temperatures for Austin, Texas that day. And what they'll do is they'll chop off the outliers and go with the median number, and that's the number that wins. And that number gets reported to the smart contract, and that settles the wager. So an oracle is the one that goes out and gets the information from the outside world. I know that was a long-winded explanation there, but now you guys know what an oracle is. So there's 70% of you said you did not know. Now I'm hoping that 100% of you understand an oracle retrieves information from the outside world. And I've given you two very basic examples, but it could certainly go much, much, much deeper than that. As Fury says, Oracle does deep research. It can do extensive research. It all depends on what information you need. And that for that service, typically the Oracle will take a small piece. Maybe it's like $1 here, a couple cents there. But because they're doing so much transactions and helping out so many different smart contracts, good money in it. Not Oracle the company, no. Oracle the company is a database management company. I'm talking about within cryptocurrency, there are oracles like this. Let me bring one up. I only have one on here. But here is Chainlink. This company is an oracle. It's called Chainlink. And this is the traded price of Oracle of Chainlink right now is $16 per coin. So there you go. That's your explanation of oracles. Hopefully that helped. That's why I believe no matter your stance on crypto, it will be part of our lives whether you like it or not. 100%, Jim. 100%. And I'm part of me wants to remain humble and be like, see, here we go. The other side of me wants to go back to these people who have called me out publicly, say I'm a liar, I'm a fraudster, I'm a charlatan, I'm trying to promote this garbage, and be like, I want to rub their nose in it, right? Because this is something that down the road will be incorporated in every aspect of our lives. It will be the underpinning of the financial systems, yet you won't even know it's there, right? When you go to log into your bank, you'll be using blockchain. You won't even know it, but you're using blockchain because it's faster, easier, more efficient for these banks to operate on a network that's interconnected. Right now, does Wells Fargo's system communicate with JP Morgan or Bank of America? No, they've got their own internal systems. Ultimately, what will happen is these banks will all do what's called a consortium blockchain. What that means is banks will have their own blockchain, and these member banks will be a part of that network. You and I can't get in there, but the banks can. So now all of a sudden, Wells Fargo, Bank of America, Chase can send funds instantly. They can access all their customers' accounts so we can see where everything's at. There'll be no more delays on moving money around. Sorry, we're putting a hold on that check for 2 days. No, instant, boom, look at the blockchain. They've got the money, done. So this is upgrading our financial systems, guys. And I could not be more excited. I think that, to be involved in this space right now is huge. I was just talking to Jordan Matthews, and he's like, I've been buying, Bitcoin since 2014. I'm like, dude, you're way ahead of most people. We are taking steps slowly into the future here with technology. Again, our financial system has been controlled by entities that do not want to upgrade their systems. The banks have monopolies. The financial firms keep us in the dark and continually utilize us. Now, they're still going to do that, but at least the systems that they're using are faster, more efficient, more transparent, and more trustworthy. So it's going to be an exciting one. No more checks in the mail. Oh, look, Fury, we were talking about this one today in the class. You go out another decade, you go out 10 years, everything will be instant, all electronic payments for everything. You won't even get a check. There'll be no check where you get paid, it just shows up in your account. And we could talk about that one maybe another day. It's a little sketchy. Now, if Merlin could only find tickets to fish, I got tickets to fish. I got tickets to fish at Hollywood Bowl. So I will be at all 3 nights of the Hollywood Bowl show. And by the way, it's with a PHISH. Escrow services will be a thing in the past. Yeah. And Big Ab, I think that's the important one, is to think today, what industries are going to be impacted the most by this, right? Because for me, it's an investment opportunity. One thing that I think this company is going to zero. This is Western Union. You used to use this to send money around the world. I think it's pretty clear and evident that unless they find some way to change their business, these guys are going to zero. Who's going to send money around the world with Western Union when you have to spend a ton of money to use it? Let's look at Western Union's fees, right? Hold on, let me just bring up real quick. You're going to make me go an hour today. Western fees. Okay, so let's go here to Western Union fees. For amounts between $0 and $300, the fee is $5 plus 1% of the amount being sold. $5. For amounts between $301 and $1,000, it's $5 plus $1, 1.75%. I could send $1 million worth of Solana from here to any person in the world and spend, 30 cents, 40 cents. So right away, you're saving yourself significant amounts of money that's faster, more efficient than traditional systems. So, yeah. What did Fury say was so funny? No more checks in the mail? Let's see. Hence when I said the first Apple, yep. That's what's crazy is a lot of this is being tested and oh, where did it go? You moved. You moved that one, Jim. All right. Don't we have a thing called Zelle? We do have a thing called Zelle. Zelle still keeps your bank siloed. Now, you can use Zelle to send money back and forth, which is great. But remember, the other part of this with crypto and digital assets is, I'm glad you said that, Saba. Way to push this into a 1 hour show. I'm ending before an hour, so you got 3 minutes left. With Zelle, it's controlled at the mercy of your banks. Part of what crypto allure is, I don't need to use a bank anymore. I can essentially become my own bank. So I can still access the rails of the bank if I want to, but I can use things like Bitcoin or decentralized marketplaces that don't use a bank. There may come a point in the future where some of us, I'm definitely in that camp, will choose not to use a bank. That I will do transactions outside of the traditional financial system, and digital assets will allow me to do that. Big Ed says, after a bad night on the crap tables at Vegas, Western Union is the lifesaver. Oh boy, back in the old days. Maybe. I never did. I love being my own bank too. All right, let me go into, we really have nothing that's important happening on Monday. So for the U.S. markets, you've got nothing on the economic calendar, and the earnings calendar is pretty boring as well. So I will wrap it up with that. I don't know where we're going to be headed next week. I do expect a lot of volatility. I'm really surprised at the way we finished with the S&P being so strong. I've got 2 minutes left. Let me just talk about the trades that I'm in. So I still have MicroStrategy, still long, so I'm happy that it did what it did today because I want to sell more. I'll probably sell the weekly 350 calls on this one. A huge premium for 350 calls is nuts. I will be given my SMCI shares, so I have SMCI being delivered to me at $40 per share, but I collected premium on it, so that's one. Tesla expired worthless on me today. I had the 250 strike, so that was exciting. I'll be looking at maybe more next week. And I also had NVIDIA. So NVIDIA, I sold the 115 puts. That will be exercised to me at 115. Take away the premium that I collected, and I'm probably about break even right now. So I will be selling calls next week. Ideally, we get a nice gap up on Monday, and I can sell my MicroStrategy, my SMCI, and my NVIDIA for much nicer premiums on Monday. And another one was PLTR. I had the $75 strikes. That expired worthless today as well. So just wanted to wrap up some of the trades that I was in so you guys know where we're at. But there you go. All right, that was it. I didn't want to do a 1 hour show today, so here we go. You got the 59-minute ones. I'll be selling calls, Margaret, for sure on those positions on Monday. Like I say, ideally, we get a nice little gap up on Monday, or a big gap up, but even better, and I'll sell for a much, much higher premium. But, you never know. Monday has technically been a really weak day for our markets for this year. It seems like Monday has been a negative day, unfortunately. So, all right, that's going to do it for me, everybody. Hope you have a fantastic day. Hope you learned something. If you have any questions, email me at tradermerlin@gmail.com. Go do something fun this weekend. Cheers. Have a great one, and I will see you guys on Monday. Take care, everybody.